Wondering, did they send me over a bio? Shit,
Your bio or my bio?
or bio. Here we go. I got something.
Okay.
Cool. Man, Millionaire Podcast, Charles Oaksby, top millionaire. And we're here with Jason Brown. I'm sure you guys have seen him on the internet, master options trader. He has over a decade of stock options trading experience, graduate of Wayne State University with a bachelor's degree in finance. At 23, he took a $10,000 loan and turned it into a six-figure trading account. And as a result, his passion for teaching others to unlock uh, the financial power of the stock market began. Jason has since created his own online stock market education company, Power Trades University, which houses courses, live trading, and coaching, and also a community that has helped thousands of students around the world to start investing and learn the strategies to survive in both up and down markets. He is an active YouTuber with over 80,000 subscribers and has videos that have reached over 1 million views, and is the host of Money, Markets, and Mindset podcast. Welcome to the show, man.
Yeah, thanks for having me, man. I appreciate it. Looking forward to it. I was checking out some of your episodes and saw you had properties in Detroit. I heard you interviewed a guy from Detroit who did real estate. So excited to be here.
Interestingly enough, I followed you for a little bit. I actually have an options course. I'm an options trader. And I think somebody might have sent me information. And so I've been following you, seeing the content you put out. And when I saw it come through, I was like, this is dope because I definitely want him on the show. I've wanted him here for a while. So this should be a good conversation. I always start off the conversation with just tell us a little bit more about who you are and where you're from.
Yeah, so that's cool that you're an options trader too. I did notice that, and we need to collaborate more and get it out there. So super cool. A little bit about me: from Detroit, Michigan, born and raised. Grew up single parent household. My dad passed when I was 2 years old, and so just me, my brother, and my mother. And grew up pretty what I would call poor, and not poor. I always say, to pay respect to my mom, not poor from a standpoint of love and we had food and felt, safety, but poor from a financial standpoint. And I remember, as I was growing up, I would start to notice different things like, I went to my best friend's house and he had a bed. And I was like, wow, you have a bed. He was like, of course I have a bed. I was like, I thought only grown-ups had beds because we slept in sleeping bags. And so at a very early age, I started to notice the difference between finances between me and other people. And that's what really sparked my interest in money and eventually investing. And so I kind of really took up that track early on. And then once I learned the industry and learned how it worked, I always wondered, like, why don't they explain it in simple terms like regular people can understand? I remember I wanted to be a financial planner and I went and applied to be a financial planner. It was like, well, part of the interview process is like, do you know anyone in your family that has $250,000 in cash? I'm like, A, no. And B, if they do, they don't really talk about it like that. And they're like, we don't think you'd, be a good fit here, right? Because then I didn't realize being a financial planner was all about bringing people assets over so you can have assets under management. And that what really sent the light bulb off in my head and said, well, who wants to talk to people like us who are trying to get into the game, who are working class or, didn't grow up with money? And I always had a passion for being that voice for us once I figured out how the stock market worked.
I think there's something wrong with that.
Yeah, I think your mic is going in and out. No, no audio. I see your mouth moving. But I'm sorry, no audio.
Man,
It's like you just came back, I think.
yeah, I don't know. I'm just gonna have to use the MacBook mic. I don't want to use the MacBook mic, but I use the MacBook mic. It's funny because I had a similar experience, and it was cool reading that you have a background in finance, and that's exactly the case. It wasn't broadcast to me like that. It was more so like you come in, you get trained, and then we got sent to Arizona and got into like a call center. You're making calls, dialing out, and everybody else who was bringing in accounts was like, "Oh, my mom, my dad, my uncle, my cousin." and you kind of run into a roadblock. So when you hit that block, where did you go from there?
Yeah, so that was just like one part of the story that really opened my eyes up. When I was 18 years old, I took $2,000 of my graduation money and I went to a large bank and I said, "Hey, I want to invest." The girl was like, "Why?" I was like, "I want to be rich. Why else do people do this?" And she was like, "So that means you want aggressive funds, right?" And I'm like, "Yeah, that sounds right. I'm young. Aggressive funds." I come back 3 years later at age 21 and realize that they lost $1,300 of my money. So it was only 700 left. And it was at that point that I thought you go to the professionals because they don't lose money. But once I found out that the professionals lose money, for me, I said I could have lost my own money. So I told her, give me the rest of my $700 back. I spent like $200 on some gym shoes or something. Then I took the other 500 and invested it myself. And I was working at Sprint PCS making $8 an hour inside of Best Buy selling cell phones. And I'm like, all right, on a Saturday, $8 an hour, 8 hours is $64. When they took taxes out, I made like $50. So I was like, man, if I could just make $50, then I won't have to work weekends. And so, like most people do, I bought stock in a company I knew, Sprint PCS. Their stock was $5. I had 500. I'm like, perfect. I can get 100 shares. And sure enough, I bought 100 shares. And soon as I bought it, I'm sure your listeners, or maybe you can relate to this. Soon as I bought the stock, it literally tanked and went down to 4. And so now I'm like, man, this doesn't work. What am I thinking? I shouldn't have known I couldn't do this by myself. And then it went back up to 5. And I'm like, okay, I just needed to break even. And I felt like it was a scene out of a movie. As soon as it went back up to 5, I felt like somebody was sitting there with a walkie-talkie, like, send it back down, So like it went back down from 5 to 4. And I'm like convinced that the stock market is rigged at this point. Then the stock went back up to 5, and I said, I've seen this before. I'm gonna get out at 5, get back in at 4. And I did it. I got out at 5 at break even. It fell to 4. I bought in. It went back up to 5. I made $100. And then I said, wow. So if I had $500, how much, I would have made. I'm sorry, I had $500, but I said if I had $1,000, I would have made $200. Then I was like, if I had $10,000, like I would have been rich. At that time, just being a 21-year-old, I was like, that's a lot of money. And so I'm like, how do I get $10,000? So I go to Wayne State University. I have a scholarship to go to school, academic scholarship. And so just being, just understanding how the system works, I applied for a student loan because I knew we would qualify for it. And they would double pay the accountant. I would get the refund. So when I got the refund, I took that $10,000 student loan and I invested it in the stock market and grew it to like $120,000. Because once I saw that first pattern, I spent like months and a ton of time researching, investing patterns, and I didn't realize that was called like a channeling stock. And I was like, what other patterns out there exist that I didn't know about? And that's how I end up growing the account to over $120,000. And I was like, nobody's teaching this. YouTube wasn't popping at that time, and all you really had was to go to the library and get a book. And every time I would go to the library and get a book, I would have to get another book to understand the first book that I just checked out. So I was like 3 books deep, and I was like, man, how come they're not explaining this? So I was like, I'm gonna start teaching this stuff about what I learned. Well, actually, it was full-time day trading for about 3 years, making $100,000 a year. Year 3, I risk $250,000 to make $500,000, and I lose it all. I'm like 25 at this point, losing $250,000. I felt like life was over. So what actually happened was I knew the stock market worked. I just had to figure out how to make it work for me. And I started questioning if I was lucky or not. And so I actually was like, I'm going to start a YouTube channel and I'm going to blog and record me making the money back. I'm going to document my journey. So that's actually how I got into teaching and YouTube, because I was just kind of documenting my journey of trying to make the money back in the long, trying to teach people the lessons I learned and why they didn't explain it like regular people like you and I could understand it. So that's like how my passion was born.
Still trying to get that microphone right. All right. So when you were doing this trading, was this regular stock market or was this options trading?
I always came out the gate options trading because I was like, I could back then I had $500. I'm like, I was looking at Amazon, Google, all these expensive stocks. I'm like, I can't afford these stocks. And so I started Now most people probably don't start like this, but I started out trading options first. I never bought stock first outside of that $2,000 index fund that they sold me at the bank. But I came out the gate trading options because I couldn't afford. No, let me correct myself. I did buy 100 shares of Sprint stock. That was the first and only time I really bought stock. Because after that, I'm like, how do I control the bigger stocks? So I was like, I can only get one share of this $500 stock. I'm like, if it moves $5, I only make $5. I was like, that's not going to change my life. But then when I learned options, I'm like, I could control that $500 stock. And if it moves $5, I could potentially make 500, almost 100% return. So I immediately started trading options out the gate.
I think I figured it out.
I can hear you. So
yeah, I think the mic is on now. All right, there we go. It just makes the audio sound so much better when that mic is on. And you're 100% right. That's a big part of the reason why. When I was trading, I actually started out trading the stock market. And what I was realizing is in order to make as much money as I would make trading options, I have to risk the entire portfolio. And so I was just swing trading back and forth and just throwing my whole weight behind it. And I was like, I could do this way easier with a fraction of the money. We all get there different ways. But for the people who don't even know what options trading is, can you explain that to them?
Yeah, options trading, most people don't know that they're already involved in options trading every single day of their life. They just have never been explained what it is. And so let me give you an analogy that most people can resonate with. When you buy a house, most of the time you don't just buy the house cash. And even if you buy the house cash, before that, you look at the house and you put an offer in with an earnest money deposit. And so maybe a house is $200,000 and you go and put $2,000 down as an earnest money deposit. And now you have 30 days to get an inspection, get an appraisal, look the house over. Most people don't realize they just bought an option contract. So they put $2,000 down. They now control this $200,000 house for the next 30 days. And so that's an option contract. You have the right to buy an asset for a certain amount of time for a certain price.
Right.
And let's just say in that 30 days, you find out Amazon's going to build a facility right down the street and everybody's moving in that area. Well, now the house prices shoot up $50,000. So a house you now have under contract for $200,000, you can now sell for $250,000. And so instead of you actually buying the house and selling it, you sell that piece of paper, you sell that contract for $50,000. And so you put $2,000 down to control it. Now that piece of paper is worth $50,000. You made $48,000 profit versus having to come up with the actual $200,000 to actually buy the house. You can pass that contract on to someone who actually has the money and wants to live there. When you put that in stock market terms, you can control a stock for, a week, a day, up to 30 days, up to a year. And as the price rises, that contract price rises, and you can just sell that contract to somebody else who actually wants to buy the stock. Then you're just making money off the price increase without ever actually really owning it. And so, it's in so many areas of our lives. If you think about, that's like a call option contract. If you think about our lives, as every day we have what's called a put option contract on our car, meaning if you drive your car and you get into an accident, the car is worth maybe $100,000 Mercedes Benz, but you pay $500 a month to protect that asset. And if you smash it into a wall, you call them up and say, I'm putting this totaled car to you and you're going to give me $100,000 for it. That's a put option. So most people don't realize every day they pay life insurance, homeowners insurance, insurance on their car. They're paying for a put option. You're paying in case the value goes down. And that's what we do in the stock market. We buy put options when we believe that the stock market is going down and we can profit from it. But most people are like, wow, I didn't know that. So they're playing the option game in their everyday life. They're just on the consumer side trying to protect physical goods. Most people don't know that they can come over here and A, protect their portfolio, or B, make money from the stock market falling. And that's where we really thrive at, because people be like, the market's down. How'd you do today? I'm like, dude, I just made like 20 grand. And they're like, how? Or you hear people say, that's a scam. And I learned that when people don't understand something, their natural tendency is just, it's a scam because I don't understand it. And that's why, we're doing podcasts like this and trying to get the word out that it's not a scam. You just don't know the information that the wealthy people have been using for years, especially us Black people. It just hasn't been talked about at the dinner table, and it definitely hasn't been talked about with our friends, because previously the only way out was rapping and dunking the basketball and catching the football. So that's what we talked about. Let's go hoop. Let's go. How we go get to the pros?
Man, that's crazy. That's
Right?
So, yep.
So we wasn't sitting around like, how we go get these put options? The market falling, the interest rates are going up. There's a recession. How we go profit from that? We weren't taught that language. We were just like, how do we get an NBA?
So to that, what are some of the biggest misconceptions that people have about options trading?
The number one misconception that people have about options trading, and I hear this all the time, isn't that risky? And I say, like, we don't buy life insurance and say, well, that's risky. We buy life insurance to offset the risk of dying. We buy auto insurance to offset the risk. And so when people say, isn't that risky? That automatically lets me know they don't understand how options work. Because if you knew how it worked, you could protect your portfolio from losing all your money in the '08 crash, when real estate crash, when the banks crash, the pandemic happened. You could have had options to either protect your account or make more money. And so I like to say not knowing how to use options is risky, but that's one of the biggest misconceptions, is that options trading is risky. Now, options trading is like having a loaded gun, right? The gun itself is not risky. A police officer without one, that's risky, right? But can somebody with this tool in the wrong hands do some bad harm with it? And that's what we see when people be like, I'm just going to buy $5,000 worth of GameStop stock because I read it on some forum, and then they lose all their money. Then they go tell their friend, like, I lost all my money. And that's where the seeds are planted as risky. But it's like, no, that person is risky, not the actual strategies themselves. It just depends on how you use it.
So speaking of risk, and then also the strategy behind it, can you kind of walk us through your process for finding profitable options trades and kind of hedging that risk?
Yeah. And as we talk now, I'm in the trade right now. If you see me looking left, looking right, I'm up $20,000 in one day as the market is dropping right now. And so what we look for in these trades is, first, you have to understand the most important piece is an option is a derivative of the stock chart. And so we have to learn how to read stock charts and learn how to read patterns. So just like I told you, when I bought that Sprint stock at $5, it fell to $4. And then it went back up to $5. And I'm like, please go to $5.50. And it fell to $4. Well, if I had known how to read a stock chart, I could have saw that the stock was channeling between 5 and 4. And I would have known beforehand to wait until $4 to buy it as a stock. Same thing with an option. Instead of buying a stock, I'm just going to substitute that with the option. And so when you looked at that Sprint stock that I bought, when it went from 5 to 4, it was like maybe like a week. 1 week it went from 5 to 4. Next week it went from 4 back to 5. Well, you start to look at that time frame, and that tells you roughly how long of an option you need. So sometimes people say, how do you know how much time to buy on the option? I like to look at the chart, read the pattern. And once I determine, oh, it takes about a week for it to go up to down and down to up, I always tell my students, double the time frame that you think is going to take. Do not assume that the market is going to be perfect. You're like, it takes 7 days. I'm going to get a 7-day option, because something could happen and it takes 8 days, 9 days, 10 days. Some news could come out. So we like to double the time frame that we think is going to take based off reading the chart. But once you learn how to read the patterns on the chart, you take what you would normally do with the stock and you just substitute it with the option, and then you double the time frame. That's kind of a safe formula for, getting in and getting out, ideally safely. Does it work 100% of the time? Nothing does. What we teach and what I preach is that you want to be right more than you're wrong, and you want to be right bigger, and you want to be wrong smaller. And so if you take 10 trades, if you're right on 7 of them, I'm happy. If you take 10 trades and you're wrong on 7 of them, but you're wrong 7 by $100, so you lost 700, but on the 3 you're right, you made $1,000. You're up 3,000, but you lost 7. You're net positive 2,300. So it's a numbers game. But if you come in this game think, I'm never going to be wrong on any one trade, you misunderstood the industry. It's like somebody going to the pros or play basketball or football, and like, we're going straight to the championship. We won't lose one single preseason game. We won't lose one game in the finals. It's like, look, long as we win 4 of the 7, and that's the name of the game with the stock market. And also, long as we win the games that count, the playoffs, the championships. And that's how I look at the stock market. Long as you lose small, that's the preseason games. But when it counts and you make 2, 3, 4, 5 grand, you want to make sure when you're right when it counts. And when you're wrong, it's small.
Yeah. So a lot of people have trouble picking their entries and their exits. What are some tips that you have for them?
Well, really it goes back to what we just talked about. To understand the entry and exit, you have to look at the stock chart and understand what are the patterns. And there's many patterns too, and I can get that this can be a confusing game. And so sometimes people are like, do I use Chaikin, Bollinger Bands, all these different things? And I found there's only 3 patterns that are the most profitable. And one of them was the one we just talked about, is a channel in stock. So I would tell people, just get good at one. If you like that channel in stock where it's going from 5 to 4, 4 to 5, spend all your time looking for that pattern. What happens is you learn one pattern, then people are like, maybe I should day trade. Then it's like, there's different patterns for day trade. Then you're like, I should swing trade. Well, there's different patterns for swing trade. I should do long-term investing. That's a whole different game where now you're researching fundamentals. And is it a good company? Do they have good management? So what happens, most people keep switching their strategy and they never really get good at one. So if you're going to trade channeling stocks like I did with Sprint, then just get good at looking for stocks that are channeling in between 2 price points. That would be the first thing that I would tell people, so that they don't get overwhelmed, because it's easy to hit the YouTubes and Googles and like everyone's swearing that their pattern and their thing is the next best thing. And it's not whether they're wrong or right. It's about which pattern can you identify when you're at home in the back room by yourself. And after you practice it, which one can you consistently be profitable on? I don't care about the next guy, the next girl. Which one resonates with you? Which one can you find and pull the trigger on and be consistent with? And that's the pattern that you should focus on. And then you can potentially add some new ones to your repertoire.
What are the other 2 patterns?
Well, you got channeling stocks is one, but you got the sideways channeling, so from 4 to 5, but then you have the uptrend in channeling. So you'll see it do the same thing, but if you turn it on kind of like a slant, you see it go up, boom, come back down, boom, boom. But they call it stair stepping higher or making a higher low. And so, yes, it'll come back down, but then it'll go higher, come back down. So it's making higher lows. And then if you flip it upside down, it's also the same thing. There's the channeling downtrending pattern as well. And there's a ton more, but if you could just master those 3, that's what we teach you. Like, these are the 3 most profitable patterns that any normal person can recognize without having fancy software. Yes, there's Bollinger Band breakouts, breakdowns, moving average cross, MACD, but average, I just work normal person. You follow those 3 patterns, it's lights out.
Yeah. In terms of trading, do you follow just like a small handful of stocks, or are you just looking for whatever's moving?
I follow literally about 5 stocks. Mostly I trade the SPY, which is the ETF of the S&P 500. A lot of times we're doing some stuff with Google, Amazon. It just depends, because before we were doing stuff with Tesla, Boeing. So it really just depends on the stock. But what happens is when you really understand a specific stock, you're not caught off guard by anything. I noticed when I used to jump like, oh, let's do this stock. And I buy it, I go to sleep next day and find out like they were in the middle of a lawsuit. I'm like, how did I not know that? It's like, well, they've been in a lawsuit for 3 months. It's like, I haven't been following them for 3 months. I just saw it last night. And so you kind of remove that, like that John Madden says, where'd that truck come from, right? You remove that getting hit by a bus out of nowhere, because you're like, I've been following Apple or Amazon or the SPY. I know what's going on with the economy, interest rates. I know the Fed is speaking Thursday. You know almost everything you need to know about those handful of stocks that you can be profitable off of. And so I usually say, just pick about 5 stocks and get to know them really well.
Yeah. Yeah. So a lot of people had a lot of success in 2020 trading options. We're in 2023, market's way different. How do you adjust your strategies for different market conditions?
So what's nice about options is the strategy is the same no matter what the market condition is. The only question is, are you going with calls or are you going with puts? And so it doesn't really matter. If the market is bullish, same strategy, we're just going to use calls. If the market's bearish, you would short the stock, but shorting the stock, you usually have to have $500,000 to $1 million in your account. Well, instead of shorting stock, which is selling something you don't own, and hopefully you can buy it back later at a cheaper price and give it to the guy who paid you the higher price, you can buy put options. And so I just switch between calls and puts almost sometimes daily, sometimes weekly, or depending on what kind of year we're having. If we're in a bullish year, we're sticking straight with calls. If we're in a bearish year, we're just going with puts. What's important is to recognize the patterns. Whether we're bullish or bearish doesn't really matter. You can always find a bearish stock when the entire market's going up. You can always find a stock that is going up when the entire market is going down. Just long as you recognize the pattern is the most important part. And then you also know how to use those two interchangeably, calls and puts, and you'll be okay. If you don't know how to use them interchangeably, then you just wait till it's time to go back in with calls.
Yeah. How do you avoid getting emotional about the different things you're trading? Because a lot of people want to believe that the stock market only goes up. And so they're just strictly long-term investors, buy and hold investors. But you're buying puts in a climate that really isn't the best economically right now. How do you have the ability to kind of bet against the market going down?
So part of it is just, I won't say common sense, because common sense isn't that common. But when you take a look at everything that's going on, you say, okay, Fed has to keep raising interest rates. That's not good for borrowing. That's not good for people putting money on their credit cards. So that's technically not good for, like, let's go out and buy a new car. Well, you're going to pay a higher interest rate. Let's go buy a new house. You're going to pay a higher interest rate. Let's go party on my credit card. Well, when interest rates are low, you're like, sure, it doesn't cost that much. But when interest rates are high, you're like, maybe you shouldn't go on that vacation. Because even if we charge it, we're paying more for it. So we're paying interest. So that slows down the spending. So if that slows down the spending, you're like, that should affect companies' earnings, meaning they're not going to make their numbers. That doesn't set up a economy where stocks should continue going higher if they're missing their numbers. In fact, if I'm a company and I'm going to expand or buy the building next door, now it costs me more money to buy the building next door. Oh, there's inflation, there's wage inflation. People want to get paid more money. I'm paying them more money, but people aren't spending as much because interest rates are high. So I'm paying more money and people aren't buying as much. I got to lay some people off. Laying people off does not bode well for the economy. It's great for bringing inflation down because people stop buying because they're laid off or they're scared they might be. So it gets inflation under control. So all of those things, when you put them together, says we're going lower. That doesn't say we're going higher. We're off to the moon. And once you understand some of I always say there's three things that move the market: the technicals, the practicals, and the fundamentals. Technicals is looking and reading the charts, right? Fundamentals is earnings reports, et cetera. But the practical is like, what is happening around us? Like, would you go buy something right now if you're scared of getting laid off, or it's going to cost you more in interest rates? And then you don't know if you're going to have a job in another 30 days? No. So that's practical. It makes practical sense that we'd cut back on spending. Companies will cut back on making money. They start laying people off. That sends stocks down. That is not a setup. That's not a recipe for this should go higher. And so when you start to understand that, it's like, let's back the trucks up. Let's get ready for the put options.
Right. So knowing all this, how do you stay up to date with the latest trends and developments? How are you staying informed? Are you watching financial news, reading books, articles, going to conferences? What does that look like for you?
It's actually kind of the opposite. Once you kind of get in this industry, one thing that new traders do is they want to listen to everybody. They want to listen to CNBC. I actually have to turn off CNBC. I have to turn off the conferences because I go to a conference, some guys like, you should do index fund. I go to some conference, some guys like, you should invest in REITs. And then I start questioning myself, like, maybe I should be an index fund. Maybe I should be doing REITs. And I'm like, nah, bro. Like, I'm an expert in options trading. I'm going to do what I do. So I try to tune out the noise and put out content versus consume it. And so I try to read and make my own decisions and say, what's going on in the economy? What's going on with these stocks? And you do have to reach out to some news sources to understand what's going on. Like watching the Fed speak. I listen to earnings call. I'll check CNBC, but I'm not checking CNBC to listen to the people that's talking. I'm checking to see what's the news tickers coming across the screen and what's the temperature of what's going on in the economy with banks and real estate and the stock market. Then I'm making my own informed decision. But in the beginning, I was listening to everybody, but that usually creates analysis paralysis. And I just tunnel vision, like you know this game, trust yourself and trust yourself to play the game that you know how to play. And so that's what I try to do. And then I now try to be a resource of news and information and say, not just this is what I regurgitated that I heard on the news today or read, but hey guys, here's what this means when they raise interest rates. Like I just explained to you, credit card is going to cost more. A car that you were going to pay $50,000 for and you had a $500 note, now that note $650. That's $150 more out of that family's household, and they're scared they're going to get laid off. So I try to be a filter and say, let me go get the information. Let me filter it to what traders really need to know. Like, how do I use this to make money from it?
I feel like in a lot of instances, like CNBC is late to the party. And
almost
so,
all the time.
And a lot of people, they'll try to take like their investment cues from CNBC, and now you're catching the back end of that trade.
Almost all the time. One of the things that used to bug me about CNBC is when CNBC would be like, stay away from stocks, it's a horrible time. Then the stocks are going up. Then after the stocks are going up, they'd be like, that was the time to buy. You should have backed the I'm like, go rewind the tape. Y'all was just telling everybody stay away from stocks. Now they're like, that was the time. You're like,
yeah.
But here's the thing. Because if somebody from CNBC is watching this, understand I am not upset at them. I think the regular consumer can't separate when this is someone's job is to provide news and entertain and increase ratings versus are they a real trader with real money in the market? CNBC people can't even trade stocks on their own because they get so much news. They have to sign a disclosure that they can't trade individual stocks because of the position that they're in. So you got to understand, they're not even talking from a trader standpoint. They're talking from a 7 o'clock nightly news. This is my job, and after these messages, you won't believe what happened with Tesla. I mean, it's like to get you to come back from the commercial break and keep watching. You won't believe. Let's see how the market closed. Continue watching. We got to keep you watching to keep the ratings up. So you got to understand they have a job to do. It's not their fault, but they're not traders. And that doesn't mean because they're not traders, they don't have some good information, but you have to pluck and pick what's useful to you as a trader and as a real money investor. And I had to learn that the hard way, just going to them for advice. And like you said, they're always late to the party or they are completely wrong about something and it doesn't matter. They don't care. They're like, I can't buy it anyway.
Yep. I should have asked you this earlier, but what was it like at a young age in college to be coming into so much money? Like, what did your life look like? Did it change or were you the same?
Oh man, that in itself is a whole story because when you make that much money young and you've never been around money, you've never been taught how money works, I totally botched it up. And when I say I botched it up, you're like, well, you was making $100,000 a year for 3 years. It's like, yeah, I risk $250,000 trying to buy a $500,000 condo. Like, number one, why did I risk $250,000? That wasn't smart. No one told me like, maybe you risk half of it, or maybe start to buy your first property with half and trade the rest with half. Like I had no guidance, right? The other thing is I didn't pay taxes for a while because I was told I was going to be able to write all this stuff off and I would be able to get trader tax status. And as long as the money was still in your trading account, it's not really, you didn't pull it out yet. And yeah, as long as I closed that trade, I owe taxes on it, right? And then I was taught, I bought a Lexus, put it on 20-inch rims. They're like, oh, you can write off your car. I work from home. I couldn't write off my car. And then it wasn't a 6,000-pound car, so I couldn't Section 179 it. Like, I knew nothing. So when I lost all that money, I actually owed a bunch in taxes and I was flat broke. And so my point is I did what regular kids who get money do, right? I bought a car, I put it on 20-inch rims, I moved out to the suburbs, I'm partying, I'm dealing with women, I'm having the time of my life. And the whole time, the tax man and the debt man is laughing at me like, we go catch up to you, son. so so it caught up to me, but I'm so glad it happened to me early on because now, we own a beautiful house on the lake here, fully paid off. Our cars are paid off. We have no debt. I finally got the cars back. I had a Ferrari, sold that, bought a Rolls Royce. So we bounced back. But if I didn't go through that earlier, I don't know if I'd be as smart as I am with money now.
Yeah. I was going to ask you how things have changed now for you financially. You kind of spoke to that. Why'd you get rid of the Ferrari though?
So I bought the Ferrari so again, in life, we're maybe you've heard this before, maybe your listeners are like, those people wasting those money on those cars. And I bet the oil change cost them $3,000 and that's a depreciating asset. But then I'm like, but I'm back in my mind, I'm like, I hear people who buy these cars as investments and then like they're rare collector. So I started studying alternative assets like watches, like Hublots, Rolexes. I started studying cars. And so I was like, I'm like a experimental type person. I'm like, I gotta find out for myself. And so I started studying this stuff and then I bought my first Ferrari. And I was like, all right, if I lose money on this, at least I paid off the house. I got my trading, I got my business. Like I'm fine. It wasn't even a point where I cared if I lost money. It's like I'm in a position to finally test this out. I literally sold my Ferrari for $30,000 more than what I paid for it after driving it for like 2 years.
Wow.
And so I started to learn that there are these alternative assets that it's not like a Cadillac. It's not like a Toyota Prius that depreciates. They either hold value and sometimes go up in value. And so that's what I started to learn about this. So then I said, buying the car is one thing. I don't know the whole process until I sell it. So I actually didn't want to sell it, but I said, I need to know. I know what it's like to buy one, but I don't know what it's like to sell it. How long does it take? What type of buyers come? Are they tire kickers like a regular car person? But a lot of these people buy these cars sight unseen. So I learned a lot about selling the car as well because I bought it sight unseen and I almost sold it sort of sight unseen. They didn't see it till they came to pick it up. They just, it's a lot of pictures, videos, and you connecting with the Ferrari maintenance people to show the records were taken care of. It's different. It's just a whole different process when people are buying these cars, these exotic cars. So I wanted to sell it to see what is it like to exit it, because it's like stock. You can buy it, but or options, anything, you can buy it, but it's not till you exit it that you can see what it's like to get in and get out and bring the money home. And so once I sold it, I was a little depressed actually, because I was like, man, I had fun driving the car. So I was like, what's my next car? And then I ended up getting a convertible Rolls Royce. And but I wasn't scared to get the convertible Rolls Royce. The old me would have been like, I ain't paying that much. But now I'm like, I'll probably be able to get out of it for the same price, if not more. And there's some other things with it. So I'm like, I'm fine. But I wouldn't have never known that unless I bought one and got into the game. And I think investing is the same way. A lot of people are sitting on the sidelines watching, and you really don't know what's true and what's not until you like actually get into the game and you realize like, whoa, this guy on YouTube said they made 10, 20,000 in one day. Before you like, they're lying. Now you're like, no, I get it. Because I bought 100 shares and I made $1,000. Had I had 10,000 bucks or whatever, I would have made X amount of money. So that's why I sold the car, to answer your original question. Just the experience getting in and getting out.
That is interesting. I had a tweet that said like the rich get richer because even the things they buy to flex either maintain in value or increase in value. So it's like you're spending money on something, and it's like worst case scenario, you just get your money back. It's not like it goes to zero. The watch you're wearing is not going to zero.
It's not. And I love it. I love that about this game. It's like I couldn't have said it better. Even the stuff we quote unquote buy to flex holds its value.
Yeah.
I like that. I'm gonna have to borrow that.
Man, so what does the future look like for you? What are you working on these days, and where do you see your brand and business going?
So really, and I'm actually literally about to close this trade out live because I have to pay homage to my shirt, which is you never go broke taking the profit. And so I just put a sale order in. We'll see if it gets filled here. But what's next is really just I asked myself that too. Once you kind of get a certain amount of money, you're like, I want this car, I want this house, I want a watch, and this, that, and the third. Once you kind of get past that, now for me, I just look at the game like, can I compete at the highest levels? And whatever that means. I look at other YouTubers and say, I respect what they got going on over there. Can I compete with content? Can I compete with podcasting? Can I compete helping people? Oh, you got a shirt? I want to see how many people I can get to wear my shirt. Oh, you got a financial movement? How many people can I help get out of debt? And I'm talking Dave Ramsey. Okay, you got a national show? Can a black kid from Detroit scale it up to have a national show and just help people scream, I'm debt free, or I'm a millionaire from the stock market from what I teach? And so that's really the trajectory that we're on now. It's just like, how many people can we help? Because it's kind of cool and cute when you do it, but then you kind of look around like, but none of my friends have a Ferrari. None of my friends have a Rolls Royce. So now you kind of like, how do I bring not just my community, but anybody who was sitting at home like me years ago saying, how does this work? And why don't they explain it like I understand it? I can understand it. That's like my mission now. It's just to help people realize it's not complicated as you think. You don't have to go to school for this. It's not only for white people or the people from the other side of the tracks. You can do this too.
Yeah. Another question I meant to ask you early on is, you've had this success and you mentioned your upbringing. How has that impacted the people around you? Your mom, your maybe siblings?
Oh man, it's everyone's proud is the simplest way to say it. And to be the example for your people, they say it only takes one such and such to change the family tree, one Ford, one Bill Gates, one Rockefeller, right? It feels good to be the one Brown that's like changing it for my family on down. And, growing up, you see these cars, you see these homes. I feel so proud my little cousins don't have to look to a rapper or someone else to be like, how'd you make your $1 million? Or like, what'd they do to get their Rolls Royce? They're like, my cousin Jay got one. Like, we was just riding in it the other day. And so it's such a feeling of pride when you're not selling drugs, or you're not doing anything illegal, and the trade just got filled.
Nice.
$36,000 today profit. Not even kidding.
That's crazy.
It's a beautiful thing when you can be the example for people and they don't have to look any further, because you're always like, man, if I could just get around somebody who's a millionaire, if I can just, I don't know if you ever did, we would see people pull up in a nice car and we would like, I look back, like we probably scared the poor guy. We would be like, what do you do? Will you mentor us? He get like 3-4 black kids run to, can you mentor us? What do you do? How do you drive that car? He's probably like, I just came to Chipotle to grab some food real quick. But we were just so hungry to try to get mentorship. And we was like, if we could just get around somebody like that. And like, I'm just proud to be the somebody that my people can be around and say, here's how it works. Here's how I did this. And then here's how I built the business on top of it as well. And it feels good to be the source.
Yeah. Yeah. Speaking of like the kids, what are some ways that you give back or that you plan to give back?
So I won't say I'm the biggest contributor at my church, but I definitely have donated the most I've ever donated in my life. And it feels good because we used to just put $1 in the collection plate because that's all we had. And, at the time I used to be embarrassed. Like, we only got $1. I used to ball it up in my hand and kind of like throw it in there quick, hope nobody saw it. But now, we like to be some of the biggest financial contributors at the church. What's cool is my mom now has an investment account and I co-manage it with her. And, that's something she's never had in her life. So for her son to be the one that's sharing insight versus going to some bank or somebody we don't know, it's just a feeling of pride. At our local school up here, not local to me, but like Southfield, which is like a couple cities over. I have a friend who's a school teacher. I was able to go in and talk stocks with the kids, do some stuff there. We had a building down in Detroit and we had an office space. We would do seminars down there as well. I just try to bring financial literacy anywhere that I can, but especially to the youth who was taught that this is not for them, especially for the kids who like, what if I don't want to go to school? Or what if I don't want to take that route? That does not mean you can't work quote unquote on Wall Street. You can't work in the investment area. And so I just try to give back any way I can with knowledge and time more than money. Because if I teach people how to make this money, then our impact just multiplies.
Yeah. So you never left Michigan?
Never left Michigan, but I question that on a daily basis. But we're thinking about getting a winter home somewhere else because we can now. We're not pigeonholed to like being here physically. And so we've been thinking about getting a winter home in California or Florida.
Florida's better than California, in my opinion. I live in California, and
Oh,
I've been to Florida a few times, and I just like it way better.
Yeah.
Cost of living, and it's the same essentially lifestyle, like same weather. They just have warmer water at the beach. We have pretty cold water, but you can do what you want to do, man. You got the bread.
We're still researching right now. We could look into the Carolinas as well. I hear it's pretty decent weather in the area. But if I could just get up out of here when it's winter, I mean, we had a winter snowstorm last night, and it's snow out there.
That's what ET did. ET kept his Michigan home, moved to California, moved to San Diego. San Diego is very nice.
Yeah, I'm totally familiar. I was in Eric Thomas's mastermind for the last year or so, and then I was in his Breve University back when they first started that. So I'm definitely connected with him. Yeah, he still has the Grand Ledge house, but he's out there in Cali in the winter, I should say.
Yeah. To kind of head towards the close, but make sure I get some more information on options trading. I don't want to lose this opportunity. What are some of the best resources that you recommend for learning about options trading?
Ooh, I mean, that's tough without plugging myself. I believe I'm a good resource, but let's go broad. I definitely think YouTube is a good resource for people. The only problem is there's so many conflicting views on YouTube that it's also easy to be like, well, this person said this and this person said that. So it's good and it's bad. It's like the gift and the curse. I think podcasts just like this, I'm sure you have a course. I think sometimes, just taking a shot on a creator, whether that's you, me, it's a bunch of people out there that have courses. I think sometimes just taking a shot on a course creator and realizing that, look, I don't know how much your course costs, but I mean, most courses anywhere from 100 to $2,000-3,000. That's still cheaper than a $50,000 degree that you may not use and come out in debt in. And so take a chance and say, do I like this guy? Do I like his teachings? Here's $1,000. If I learn one thing, it was worth it. If I learn nothing, 1,000 wasn't that much money. But you want to kind of do your research. But I really think people like you and I and people that actually trade are really good resources, because when you listen to the people on TV, they're not actually traders. And that's where people get lost. I also think people got to be careful with these random forums of like, let's all go buy GameStop stock today. And it's like, you're really just kind of in there listening to a bunch of people in the digital casino platforms. It's like, is that really who you want to be getting your stock trading insights from? So I think looking for courses and coaches like us, podcasts, YouTube videos, and trying to nail down who you want to hook your caboose to and kind of learn from. Obviously, you can learn a ton from books, like from people who are documented, like Warren Buffett. But the problem with Warren is you'll get principles. You won't get how to make money in today's economy, right? Warren has enough money to buy 10 billion shares of Apple. You don't. And so you'll get some principles. But if you want to learn what's happening in right now in this economy, I think hooking up to people like us that are actually in the market and in the trenches is where people are going to learn the most. And then we have our YouTube channel. We give away PDFs, downloads to get people started, stuff like that. And then even brokers have trainings inside their platform. So there is, in this day and age, there is no shortage of information. And so it's just up to you to kind of purge the information and find out what's useful, and then how can you make it work for you?
Yeah. What were some of your most successful option trades?
One is on my YouTube channel. Well, there's 3 on my YouTube channel that I would say is my most successful. One, I made 400 and I think it was 460 or $420,000 in one trade. And I started off documenting my journey of making the money back. So I still do that to this day. And whenever I have, like, if we weren't online right now, I probably would have recorded me closing out that trade, because I like showing people that it's real. But I documented, I recorded when I made like 400 something thousand. And then we took the balance and paid off our house. So we documented going to the bank. We documented the trade and going to the bank, getting the check, paying off the house. I did 2 trades, not back to back, but 2 times in my career. I did $100,000 in one day, and I documented it. When I was close to hitting it, I turned on the camera and I live streamed closing out 100,000. But I like blurred my account, and you could see the emotion though, because when I turned on the camera in the live stream, I was only up 80. Well, the market turned and I was only up 70, 60, 50. And I was like, I just lost 30,000 that quick. Then it turned back around, bing, and then it hit, and I like recorded it. So those would probably be my 3 most like memorable like trades.
Yeah. What are some tips that you would give to somebody who wants to get started today that knows nothing about options trading?
Learn how to read stock charts. The number, because options trading again is a extension of understanding the stock and how it behaves and how it moves. If you're not reading the chart and you're just going to jump right into options trading blindly, you're most likely going to lose all your money. So I would say start with the stock chart. Some people, I did a post about this on Instagram and all the other platforms, but somebody was like, well, why did the stock fall? And I said, I don't care why it fell. All I care is that I can see on the chart that it's falling. I'll research later why did it fall. And so what I'm trying to say is most people get caught up in like, should I learn the fundamentals first? What's the earnings report? What's good earnings per share and this, that, and the third? None of that matters to me because good companies, Amazon got cut in half. Tesla was trading at $400, went all the way down to $100. Good companies didn't care about the earnings per share and all this and that. All I care about is that I could see that my account was about to get cut in half and I know when to get out. So if they can learn to read stock charts first, then all we're doing is substituting options for what we would have done with stock. But you can't substitute something you don't understand. If you don't understand what the stock is doing in the first place, you're substituting blindly.
Yeah. Yeah. Last few questions. We can do them kind of rapid fire. The first is, looking back in your career in options trading, what have been the most valuable lessons that you've learned?
The most valuable lessons I've put into these shirts and what I teach the community. One is you never go broke taking a profit. Like even as I'm sitting here and I close that out, there's this innate ability to say like, but I can make more. And you also could give it all back. How many people's like, I was up 10,000. Then it turned around and I broke even, or they lost 10,000. So you went from positive 10 to 0 to negative 10,000. You really lost $20,000. And so you never go broke taking a profit. If you just, I don't care if you make $100 every trade. If you did $100 every trade for 20 trading days in a month, that's $2,000. So you never go broke taking a profit is one thing that I've learned from the stock market. Number two, no one stock is going to get you there, right? You ain't got to ride it all the way to the moon and you ain't got to ride it all the way into the ground. No one stock is going to get you rich. It's a series of stocks that you do calls and puts on that over time will continue to build your account. So people got to understand no one stock. So it's okay to take profit and then roll that into your next trade because no one trade is going to get you there. Those are some of the things I learned. I learned also that it's a lot of personal development. If you find that you're lazy in real life, you're lazy with the stock market. You don't do the research. You don't read the charts. If you find that you're greedy in the stock market, you're probably greedy in real life, right? If you're fearful, like, well, if I'm going to lose my money, you're probably fearful in real life. And so you'll learn that there's some things you'll learn that a lot of students say, I came to you to become a better trader, but I ended up becoming a better person. Because you'll find that there's some things in your personal life that spill over right into the stock market, like being greedy, being fearful. You were up, I was up $36,000. I closed it out. But what happens is you'd be like, I can make more. And so we're like, where else in your life is your wife not good enough? Are your kids not good enough? You just got a promotion, but it's not good enough. Like where you'll look at people in their life, like I lost 10 pounds, but I should have lost 20. It's like, you probably do that in the stock market. I was up 15, but I should have been up 30. It's like, be grateful, be happy. You lost 10 pounds. Like, it's okay. Go get them on the next 10 pounds. But like, you'll notice you're probably ungrateful in other areas of your life. And so that's one of the biggest lessons I learned about the stock market, that it's really a personal growth plan with a compensation plan attached. Like you really have to become a better person to get to this money. You got to be disciplined. You got to get up. You got to watch the charts. You got to get out when you said you were going to get out. You got to cut the loss small when you said you were going to cut the loss small, which is all discipline. And you'll notice most people don't have discipline in other areas of their life.
Man, that's crazy. That was deep right there. What's your favorite business or investing book?
Two books come to mind. One is Think and Grow Rich. That was one of the most profound books for me because it changed how I think about everything in life. And then my best business book, I would say, was Be Rich Dad, Poor Dad. That really opened my eyes up to, like, oh, buy 2 bikes and rent one out, and how those kids did the whole comic book store thing and set up a library and was charging 10 cents. Like, you start really thinking like, whoa, like you really don't have to have money to make money. You have to have an idea. And that book kind of taught me how to think differently.
Yeah.
And see the different opportunities.
What does wealth mean to you?
So there's rich and then there's wealth. And rich is like rich with abundance of something physically, like money. I got a bunch of coins, whatever, bunch of Bitcoin. I'm rich with Bitcoin, whatever the case may be. But wealth to me is, I like to keep it simple. Wealth is having both time and money together without ever having to choose which one is more important. And if you layer that on top of health in your relationships, because if you got an abundance of time and money, but your health is failing, that's not good either. But if you got a bunch of time and health, but you're broke, that's not really a good, good time either. So you look at time, money, and health and, relationships together, and you don't have to sacrifice one, then you're truly wealthy. And that could be at any income bracket. If the guy that makes $50,000 or girl, and they're happy with their husband, their wife, and they're healthy, and they got, then the guy who's making $1 million, but he's in the hospital because of stress. His kids are like, I never knew my dad because he was always working, even though we already have millions, right? So you can win and still lose. So wealth to me is, making sure those pillars are intact. And then, you could even layer God in there, making sure you're not compromising your faith to get to the money.
Yeah. What sets apart successful options traders from those who give up, fail, or never get started?
It's a lot that separates. If I could pull out a couple things that I've seen over the years, is people say things like, I'm going to try it on my own first, and then I'll join a course or community, get a coach. And what happens is a couple of things, kind of like golf. You develop a bad habit, and now we have to break the bad habit and now teach you the correct habit, which is even harder. Number 2, you got a mental preconceived notion about how the stock market works. So now you have fear now. When you first learned about it, you were excited. Now you've lost some money. You got to pay a coach or get a course. You lost money. You got to come up with more money. And now you got a chip on your shoulder. You have fear on your shoulder because you didn't come out learning it the right way. So those are some of the things that's either hurt people right out the gate, or people come out the gate again and they just assume it's risky. And so you have to understand people's agenda. Dave Ramsey's job is to have you stuffing money in envelopes and paying cash. His job is not to have you options trading. So what do you think he's going to say? Don't do any of that until you pay off this and cut up the credit card. I'm like, why would you cut up your credit card when you can charge everything, turn around and pay it and get cash back and get paid for using the credit card? But his job is to do that, right? And so I think people, before they get started, they don't take time to pause and say, where's this advice coming from and where are they coming from? If you talk to Grant Cardone, he'll say, man, that option trader guy on that podcast, don't do all that. Buy single family apartment buildings. Well, his agenda is real estate. So he has an agenda, right? And so everybody kind of has an agenda, and people who are not in this industry, their agenda is to make it look confusing, scary, tough. You can lose all your money. So you can do their thing. And so I would say just question where the advice is coming from.
Man, great conversation. Before I officially close, I want to ask if there's any final thoughts you want to share with anybody.
Yeah, my final thoughts. People ask all the time, like like you said, how can I get started, or do you work with people like me? And like I said, I appreciate you having me on your podcast. I want people to understand that you have a course, I have a course, we have a free PDF download and free resources that people can use. But I want people to take the first step, download that PDF, listen to your podcast, watch that YouTube video, watch my video where I made 100,000 in a day, because then they can start to believe and see, like, okay, now I have to reverse engineer and find out how he did it. But once they start believing and understanding, then the third step is they can start to see, how can I incorporate this in my life? I work a full-time job, or I don't have as much money as that guy. It's okay. How do we make it happen with the money that you have? And so if I can be of a resource, they can, check me out at thebrownreport.com and check out my free resources. We've been more than happy to help. And if there's any other way we can collab to help each other, I'd be more than willing to plug in so that we can make the entire community lift up, because it's more than enough business for all of us. And they need to see more, especially brothers, in this game.
Yeah. Where else can they find you? I know you mentioned your website. What are your social media handles and any other things that they can reach out to you on?
So if they go just to thebrownreport.com, the YouTube links at the bottom, the Instagram links, TikTok, but it's actually The Brown Report on all platforms. The reason I usually like to send people to the website is because I don't know if you had this happen, but there's all these fake accounts that try to create. I have like Brown Report _1, Brown Report 2. And if people don't know that I'm the first, like, just Brown Report, no extra letters, they might follow like a fake account until Facebook shuts them down. So, but it is just Brown Report, no ones, twos, underscores, nothing. But if they just go to thebrownreport.com, they know for sure they're clicking the right link for YouTube, Instagram, TikTok, etc.
Dope. Awesome, man. Thank you for coming on the show. We appreciate you guys, or we appreciate you, everybody who's listening. Make sure you guys go to thebrownreport.com, check out his information. The brother is solid. Like I said, I've been following him for a good amount of time. I'm not sure exactly how long, but I've been seeing the great things he's doing. And it definitely is inspiring to see. And the fact that he's still out of Michigan, just hunkering down, paying off homes, it's really cool to see. So shout out to you, man. Anybody who wants to check out my courses, you can check out that information, the link in the bio. Make sure you guys like, share, and subscribe to the podcast. Give us a 5-star rating, because we like 5-star ratings. If you think it's a 5-star podcast, I think this is a 5-star interview. So again, appreciate to have you. I'll see you guys in the next one, and we are out. Dope, man. Let me see.